Lithium companies that are trading at a valuation gap and have healthy growth visibility in the next 5 years. These are the lithium stocks to buy before they double in the next 12 to 18 months. Lithium Americas' approval of $2.26 billion loan from the U.S. Department of Energy is likely to trigger a big rally. Albemarle Corporation. Focus on cost cutting and maintaining a healthy balance sheet for aggressive growth once lithium recovers. Piedmont Lithium. After-tax net present value is indicative of significant undervalued. Let's dive in. Battery boom beneficiaries. Here are the 3 lithium stocks to buy before they double. Welcome to Timely Investment Research. Electric vehicle stocks have corrected in the near term with factors like competition and macroeconomic headwinds impacting sentiments. However, in terms of EV adoption, the global markets are still in an early stage. In the coming years, quality EV companies will create massive value. Among the various investment options, lithium stocks are worth considering for millionaire-making potential. As the global demand for batteries increases, lithium is likely to trend higher. The recent plunge is therefore a good opportunity to consider exposure to undervalued lithium stocks. To put things into perspective, the global demand for lithium-ion batteries was estimated at 700 gigawatt-hour in 2022. It's expected that by the end of the decade, demand will surge to 4.7 terawatt-hours. Clearly, this will be associated with a surge in demand for lithium. An important point to note is that the supply gap for lithium is expected to be acute by 2035. The plunge in lithium price is therefore a golden opportunity to accumulate quality lithium stocks for the long term. Even in the near term, I expect a big rally for some of the best lithium stocks from deeply oversold levels. Number 1. Lithium Americas. Sentiments for Lithium Americas stock has turned positive with a rally of 40% from oversold levels in the last 1 month. However, Lithium Americas stock remains undervalued, and I expect 100% returns from current levels of $6 in the next 12 months. In a big news, Lithium Americas has received a conditional loan commitment from the U.S. Department of Energy for $2.26 billion. This will help in financing the construction of first phase of the Thacker Pass project. It's worth mentioning here that the Thacker Pass has the largest known measured and indicated lithium resource in U.S. The asset has an after-tax net present value of $5.7 billion. With the financing commitment, the company is targeting 2027 for Phase 1 of production. Once production commences, earnings before interest, taxes, depreciation and amortization, and cash flows are likely to be robust. Further, there will be long-term value creation visibility with the mine life being 40 years. Number 2. Albemarle Corporation. Albemarle Corporation is another attractive name among lithium stocks that looks undervalued. Albemarle Corporation stock has witnessed a correction of almost 50% in the last 12 months. With strong fundamentals and ambitious growth plans, the stock is worth considering at current levels. The first point to note is that Albemarle has a strong balance sheet to navigate current headwinds. The company ended 2023 with a liquidity buffer of $1.8 billion. The recent equity offering of $2 billion will further improve the liquidity profile. Albemarle is also targeting to achieve long-term leverage of less than 2.5. To conserve cash, Albemarle has reduced capital expenditure for the current year. This, coupled with other cost-cutting measures, is likely to unlock $750 million of cash flows. However, the company continues to guide for 20% compound annual growth rate in lithium sales volume through 2027. Once lithium starts trending higher, it's likely that Albemarle will go aggressive on lithium conversion capacity expansion. Number 3. Piedmont Lithium. Piedmont Lithium has plunged by almost 80% in the last 12 months. Piedmont Lithium stock looks deeply oversold, and I expect a strong reversal rally relatively soon. It's worth noting that Piedmont already has a producing asset in Quebec. The company expects 113,000 ton per year of spodumene concentrate from the asset. Further, Piedmont has a strong pipeline of project development. Once the expansion is completed, revenue and earnings before interest, taxes, depreciation, and amortization are likely to surge. To put things into perspective, the company expects to increase production to 525,000 ton per year of spodumene concentrate. This is subject to all current assets being in production. If the production upside is associated with a surge in lithium price, I expect Piedmont Lithium stock to go ballistic. Coming back to valuations, Piedmont commands a current market valuation of $262 million. In comparison, the Ghana asset has an after-tax net present value of $1.3 billion. Further, Carolina and Tennessee assets have a combined after-tax net present value of $4.5 billion. Clearly, Piedmont Lithium stock is massively undervalued. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.